Good morning, everyone. Today, we're going to talk about a concept that might sound grand, but it's truly shaping our investment landscape: the empire where the sun never sets. Just like the British Empire centuries ago, there's a new dominant force today, but it's not about land or armies. It's digital, and it's called Big Tech. This isn't just a fleeting trend, its growth is driven by fundamental forces: connectivity, artificial intelligence, and global demographics. We'll explore how these powerful factors make Big Tech's expansion not just likely, but mathematically inevitable, offering a clear path for long-term growth in your portfolio. Many of us, especially those focused on securing our retirement, often ask, are we at the peak? Is it too late to get involved with these big technology companies? My answer is simple: we are not at the peak. We are truly at the gateway to something much larger. Think of it this way: the 19th century was about territorial dominion, about owning physical land. The 21st century is about digital dominion. This new form of influence is borderless, constantly expanding, and represents a massive opportunity rather than a ceiling. So, what are these fundamental forces driving Big Tech? I see three main pillars, all converging to benefit one asset class: technology. First, the sky represents incredible advances in connectivity, like what SpaceX is doing to bring the internet to every corner of the globe. Second, the ground symbolizes the explosion in capability through AI and robotics, automating tasks and creating new services. And finally, the people refers to the vast growth in consumption, particularly in emerging markets. This isn't about betting on just one company, it's about recognizing how the physical world, the digital world, and a growing global population are all aligning. In essence, all roads truly lead to Big Tech, making it a critical component for diversified, long-term portfolios. Let's zoom in on the people aspect. The world population is around 8 billion, but here's a startling fact: nearly 3 billion people are still unconnected to the internet. Think of what that means for Big Tech. These aren't just statistics, they are future customers, future subscribers, future users of digital services. Historically, mountains, deserts, and oceans kept these populations isolated. But technology is rapidly changing that. This untapped market represents an enormous growth runway, promising continued revenue and expansion for the companies providing these essential connections. To illustrate how this connectivity works, let's use a simple analogy. SpaceX is building the digital highway, but big tech companies are selling the cars and managing the destinations. Companies like SpaceX are investing heavily in the infrastructure to bring internet access to these remote areas. But once that connection is established, once that highway is built, users immediately enter the ecosystem of Big Tech. This is where the magic happens for investors. The infrastructure costs are high, but the profit margins from providing content, services, and platforms are incredibly strong. Every new connection is a new portal for growth and monetization for these platform holders, contributing directly to their earnings and your long-term investment returns. Now, let's consider how the ground, artificial intelligence, and robotics is changing the game. Historically, the digital economy was all about human users. But with the AI revolution, we're shifting to a human plus machine economy. This means that besides people, machines themselves are becoming active participants, consuming data and processing power at an astonishing rate. Generative AI and robotics aren't just automating tasks, they're creating entirely new demands for digital services. This expansion of the user to include machines means even more growth and opportunity for the companies providing the underlying technology. Where do these machines operate? They operate in the cloud. Think of it as the invisible infrastructure powering everything. Whether it's for vision processing, storing vast amounts of data, or constantly updating their software, machines rely heavily on cloud services from giants like Amazon Web Services and Google Cloud. What's truly remarkable is that while humans sleep, these robots and AI systems are continuously working, streaming data, and generating revenue through these cloud services. This represents a constant, passive revenue stream for these essential cloud providers, making them incredibly robust investments. Let's revisit the people and global demographics. While some worry about shrinking workforces in developed nations, the global population is actually projected to grow significantly, nearing 11 billion people. This growth is overwhelmingly concentrated in emerging markets regions that are just now fully embracing the digital age. Imagine millions, even billions, of new consumers coming online for the first time. This isn't a shrinking world, it's an expanding market, getting younger and larger, all eager to engage with the digital services that big tech provides. This massive demographic shift is a powerful tailwind for sustained growth. For these emerging populations, the first luxury they seek, after basic needs like food and shelter, is often digital. As the poverty line recedes in countries like India, Nigeria, and Vietnam, millions are not just buying their first smartphone, they're immediately connecting to global platforms. They want iPhones, they use WhatsApp, and they stream content from Netflix, just like us. These companies provide the operating system for their daily lives. As the global economy grows, the most valuable share of that growth, the sweetest slice, goes to the companies that have become indispensable by providing these digital foundations. This integration makes them incredibly resilient and profitable. What makes this story so compelling for investors is that these three forces, more access, more intelligence, and more people, don't operate independently. They create an inescapable flywheel, accelerating each other. More people getting online means more data for AI. Smarter AI tools mean more valuable services for people. This leads to an exponential expansion of what we call the total addressable market. The economic pie isn't just growing, it's exploding. This self-reinforcing cycle ensures continuous innovation and revenue growth for big tech, providing a strong foundation for your investment returns. Now, you might be thinking, this all sounds great, but which specific company should I invest in? And that's a very valid investor's dilemma. We constantly hear headlines: will Google overtake ChatGPT? Is Apple keeping up in AI? Can Meta's vision for the metaverse succeed? Trying to pick the exact winner among these giants is a high-risk game, even for seasoned investors. But here's the good news: you don't need a crystal ball to profit from these powerful trends. What you need is the right investment vehicle, one that provides broad exposure and reduces the risk of betting on a single company. This brings us to a crucial investment principle: don't bet on the gladiator, buy the arena. In the ever-evolving battle for tech dominance, individual companies, our gladiators, will certainly rise and fall. Some will triumph, others may struggle. However, the arena itself, the entire ecosystem of big tech, always thrives. The safest and often most rewarding strategy for long-term investors is to own the entire stadium. This approach allows you to capture the overall growth of the sector without the heightened risk of trying to pick the single best performer, giving you greater peace of mind. So, what exactly is this arena, or right vehicle? For many investors, especially those looking for a secure retirement, exchange-traded funds, or ETFs, are an excellent choice. Consider the Nasdaq 100, often tracked by an ETF like QQQ. This fund invests in the top 100 non-financial technology leaders, giving you broad exposure. Another option might be a top tech ETF, which focuses on the very largest, most dominant platform leaders. By investing in such an index or ETF, you effectively remove the single company risk we just discussed, while still capturing the incredible upside of these macro trends. This is a highly reliable way to convert the growth of billions of new consumers and the AI revolution into a truly secure retirement asset for your future. Ultimately, when you invest in big tech, you're not just investing in companies, you're investing in human progress itself. Technology will continue to advance, populations will continue to grow, and human desire for better, more convenient lives will always expand. These are the constants of our time. Big tech simply provides the mechanisms to capture the immense value created by this progress. For long-term investors, the most dangerous risk isn't being in the market, but rather, not being in it at all. A stake in the future of civilization, particularly through these foundational technologies, truly represents one of the safest assets for enduring prosperity. Before we conclude, please remember this presentation is for informational purposes only and does not constitute financial advice. All investment strategies carry risks, and there's always the possibility of loss. Past performance is never a guarantee of future results. We encourage you to consult with your financial advisor to discuss your personal investment goals and risk tolerance. Thank you.